Deals galore and tech stocks have moved higher yet again. Here's why more highs are probably ahead, with the month of November traditionally the best month of the year for stock market returns. My name's Jessica Amir, a market strategist here with Mumu, and it's great to have your company. First, let's get to the news that you need to be across. We saw Amazon shares jump to a brand new record all-time high. They were one of the best performers overnight in terms of the big heavyweight stocks, and that's because their key AWS division signed a $38 billion deal, that's in US dollars, to give OpenAI access to hundreds of thousands of NVIDIA's chips. As for the major markets, well, looking at the US, some major indices rose modestly in terms of the key US indexes that you need to be aware of. The S&P 500 closed up ever so slightly. The Nasdaq 100 up the most, 0.4%, and it's now up 23% this year. Yesterday, we saw Hong Kong's market rise the most. It rose 1%, taking this year's gain in that market to 30%. So well done if you are investing in Hong Kong heavyweight stocks or the broad market via ETFs. Australia's market only rose ever so slightly yesterday, up by 0.2%. It's now up 9% this year. As to what to watch today, well, there's lots going on. The Reserve Bank of Australia meets today. Obviously, no rate cut is expected. We've been pointing to why that is. Well, we've got hotter than expected inflation that's rising more than expected. And today is, of course, Melbourne Cup, the horse race that stops the nation. We'll cover stocks that you need to be across on the back of the race. As to what to focus and consider, today's focus is it's not too late to be invested. So you should consider being invested perhaps in November, and it's not too late to make some stellar returns before the year is out. So why is this? Why is November historically the best month of the year for markets, and why has it been the case in the past? Well, it's because it's the beginning of what we call a Santa rush, where we see a significant boost in consumer spending. Global consumers are spending more money, and we also see trading pick up in key discretionary stocks. And this is why we also see strong stellar returns for key markets and specific stocks as well. So let's think about the US. So in the US, the Nasdaq 100 has gone up 2.2% on average in the month of November. That's over the past 20 years. But scratching beneath the surface, if you're a stock picker and you looked at key stocks and just looking at them for the month of November, we can see NVIDIA, the world's biggest company, that's gone up by 6.5% on average just in the month of November. Meta, of course, the company behind Facebook and Instagram, Meta shares have gone up by 4.5% on average in the month of November. Down under, Australian stocks have put on stellar performance as well. Of course, lots of people are travelling here, there and everywhere to see relatives, buying airfares because people want to see relatives or travel abroad or locally when we have holidays on. So Qantas shares have been a key benefactor over the past many years and throughout history. In fact, Qantas shares have been a standout performer in the month of November. Their shares have gone up 6.1% on average in November. That's over the past 10 years. But wait, there's more. Of course, we've all seen the rise of buy now, pay later stocks. Of course, Zip has gone up by 11% on average in the month of November. So that's nothing to balk at. So outstanding. This means that you should be considering investing if that's something that you wanted to do. So consider investing now, perhaps be specific, or maybe look at the key indices, the S&P 500, the Nasdaq 100, and these have gone up more than the Aussie market. Let's move to stocks that you should consider adding to your watch list. The first one is Eaton. They're a US power giant in the US, and they snapped up a company called Boyd Thermal for $9.5 billion, and that's amid soaring AI data center demand. Now, I'm talking about this stock because we mentioned deals taking place left, right and centre at the top of our update today. But I think it's really important to note that the fact that Eaton has purchased a cooling company really underscores that AI chips, data centres and energy to keep everything going remain the key megatrends to watch and consider for the next decade that I believe will produce the best returns. Also note that Eaton traditionally does see their best returns in the month of November too. So Eaton shares have gone up on average 6.6% in November. That's looking back at the last 10 years. Eaton overnight was reiterated as a buy by many big investment banks, including Morgan Stanley and Citi. Consensus says that Eaton shares are a buy. The average price target, $399.19. Let's move to an Aussie-born stock, and that's Iron. Iron shares a standout performer overnight, jumping 11%, and that's because they basically inked a deal. Microsoft signed a $9.7 billion deal to buy Iron's cloud capacity. So consensus is that their shares have got more room to run. The average price target is $72. That implies a modest 6% jump in a year. But do keep in mind, I always say revenue and earnings drive share price growth. And if you have a look at consensus or what the average analyst out there is saying, there is 135% expected growth in their earnings ahead in the year. So incredible. That is actually revenue expectations. And if you have a look at earnings growth, earnings are expected to grow 62%. Last but not least, the final stock to add to your watch list today is, of course, Tabcorp. We spoke about today being Melbourne Cup, and I think that you should be watching Tabcorp for a number of reasons. Tabcorp is a standout performer this year. It's up 85% this year. So a couple things to note why I think you should keep this stock on your radar. It's not just because of Melbourne Cup today, but all in all, Aussies are continuing to spend a record amount on gambling each year. As we stand, Aussies are spending $50 billion annually on betting, and about $318 million of that goes to Melbourne Cup. I'm not saying that Tabcorp is the key benefactor of that. I'm just saying these are the stats to consider that are taking place in Australia. And Tabcorp actually is a key benefactor of that. There's many other betting stocks that are trading on exchanges, but Tabcorp is a stock to watch. Consensus is that Tabcorp is a buy. Also note that Tabcorp shares have traditionally done well in the month of November. Their shares have gone up by about 2.8% on average over the past 10 years this month. Plenty to watch and consider. Happy Melbourne Cup and happy RBA Day.